And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Hi, I'm Phil Grande. Quite a day today. Everyone seems to be confused. The market's confused, but we're not confused. I'm going to explain to you exactly what happened today. Now remember, everyone was thinking that this morning we'd wake up and the market would just blast off to heaven, just never stop. Have about another, maybe a 1,200 point rally this morning. That didn't happen. Now let me explain what's going on. First of all, when we started out on Wednesday, we were all waiting for NVIDIA to report Wednesday night. Now that's going to be a huge report. I mean, NVIDIA controls almost everything. So when they did report, the numbers are good, but the problem is the forecast going forward wasn't good. It was very disappointing. So this morning, okay, or let's go back again to Wednesday morning. Remember, the yields were at 4.68. The market was going up and everybody's happy. But by the afternoon, people started getting nervous, especially the big institutions. When I talk about, there's 12 institutions, but there's 6 major institutions that control every stock. I mean, they have all the money. They're the ones that fuel the stock market. Okay, 12 institutions. You got, and they control $32 trillion. How they get that money? They make it the old-fashioned way, work for it? No. The Federal Reserve had the Treasury Department print it in 2008, just after the crash, so they could take and do QE and, give money to everybody free and zero interest rates, I should say. And that's how everything started, because they couldn't go back and build it the old-fashioned way. Every crash you normally have is built by business investment. But you have to get money from the banks for business investment. And the banks were crushed, so the only thing they could do was to rig the market to rally for 14 years. And that's when they introduced QE, where interest rates were zero, money was free. And corporations, every time a stock would pull back, you have your stock pull back, they immediately go in, Fed would have Treasury give them money, they take the money and they buy bonds, yields would drop and the stocks would go up. And that's where buy on a dip comes from. Buy on a dips, okay, goes along with QE. When you have no QE, if you buy in a dip, you're going to get crushed, and that's what's happening now. But let's get on to what we're here. Okay, so yields on Wednesday morning are 4.68. By the afternoon, you're 4.56, dropping because all the big institutions, the guys I just talked about, especially the 6, they were buying bonds left and right, because they didn't want to get trapped in if something was bad with NVIDIA. All right, last night, earnings, good. Forecast, terrible. That's what people look at, the forecast, not the earnings. The earnings is the back. You look in the rearview mirror, you want to know what's going forward. All right, so yields all of a sudden reversed this morning. They shot right back up to where they were yesterday before they're buying the bonds to get them down. So we reversed everything. So yields, remember, always tell the truth about the market. Okay, when the yields get high like they're going now, from 4.25 back in April to where we are now, 4.6, it's telling you you're entering into a crash area. When you get into the kill zone, 4.5 or higher, that's the kill zone. They always tell the truth. IWM, if IWM turns red, while your S&P stays green, and your NASDAQ stays green, that tells you something's wrong. So in other words, Yields identify, tell you the truth about the health of the stock market. When it's going to crash, it's never wrong. IWM confirms what the yield is telling us. So the market opens this morning. Yields start again going right back up to where they were yesterday, 4.65. But yet there was no heavy selling in the market. What's going on? Well, there's no heavy selling in the market because the TV jibber jabbers are telling everybody, don't worry about the high yields. Even though NVIDIA, okay, and the 5 stocks associated with us, okay, control everything, don't worry about it. There's such demand for AI that we don't care about high yields anymore. That's what they're telling everybody today. Well, that's not true. That's not going to work out. Yields are everything. So the TV jibber jabber started out with that nonsense that demand is compensating for the high yields, so don't worry. And then as I said, the yields are the truth. IWM turned red, then IWM went back to green, confusing people. What was going on? Why this rally going on? Well, because again, the 6 largest institutions, they purchased back, okay? Not only did they purchase back their shares of AMAT, CLAC, ASML, and LRCX, those are the 5 biggest stocks that make all the chip making machines, but they also parked a tremendous amount of money in those stocks. Now understand what happens with the institutions. They look for big stocks that have a lot of liquidity. So if they want to buy $500 million worth of shares, they can buy a stock without the stock blowing up, going up 200%, right? I mean, if you took and bought 500 million shares of McDonald's today, what would happen with McDonald's? It'd go up 2,000%. So there's only a few shares that are that big. And that, of course, are the biggest shares, which are the AMAT, CLAC, ASML, and LRCX, which builds all the machines. So that's what they did today. They dumped their bonds this morning, unraveled that. Yields went back up to 4.6. Everybody's waiting for the market to blast off, right? But when the rallies went up to 4.6, that killed that. Everybody's looking for the market to collapse. IWM didn't turn red right away, even though yields were at 4.6, telling us there's a real problem, and they're telling us the truth. At the same time, Wall Street's lying to us, saying there's no problem. We don't care about high yields anymore because demand for AI is so big that nobody cares about yields. Well, then what happened was, as the day went on, we started to see the big 6 institutions parking money in those 5 stocks. The stocks everybody trades. But you're not going to see a lot of movement in those stocks. If you look at any one of those 5 stocks, you saw a little bit of movement, but you're not seeing a big explosion. And that's why they park money there. Now, sometimes they'll park money in the banks, too. And there's another place they'll park money, okay? There are 4 other ETFs they'll park money. IYZ, and they parked some money today in IYZ. And IYZ went up. So the big institutions that control the stock market this morning dumped their bonds, went back and bought their stock back. The 5 biggest stocks bought them back, and on top of that, they parked money in those same 5 stocks, okay, AMAT, CLAC, ASML, and LRCX, 4 stocks. And then at the same time, they went out and parked some more big money into IYZ. So that's why the market's not coming down. Now, how much do these people really control? Well, let's think about that for a moment. If you look at, if you look at and we looked it up here, okay, 10 stocks control 41% of the S&P 500. 10 stocks. Now, which stocks are those? Well, those same stocks, AMAT, CLAC, ASML, LRCX, is part of those 10 stocks. So if you got 10 stocks controlling 41% of the S&P 500, and 5 of those stocks are the biggest stocks, that's what's controlling the whole market, because the whole market is AI, and the whole market is the chip-making machines. And when they plowed money, when the 6 biggest institutions plowed money into those 4 stocks, plowed money in to buy them back. They sold some of them yesterday, bought them back. Then they plowed money into the ETF IYZ. No wonder the market didn't go down, even though yields are high. And people are getting confused. And Wall Street's making them more confused, or the jibber jabbers on these financial shows say, don't worry about it. You don't have to worry about yields anymore. So that's what happened. So I want you to understand, everybody's just kind of walking around, whistle, nothing happened, I'm just going to keep buying. Well, here's what you got to do. We are going to keep buying breakouts. I talked to my gang today. We're going to buy breakouts, and we're going to watch like a hawk, IWM, and if IWM turns red again, that confirms what the yields are telling us right now at 4 points. I think we're 4 point. What are we now? 4.61, I think. So right now, if IWM turns red, 4.57. If it turns red, it's confirming the yields at 4.57, which is in the kill zone, okay, of 4.5. Okay, is telling us we have a problem. Now, yields are coming down this afternoon, okay? Yields are starting to come back down off of today's high. And why is that? Well, somebody's in there buying bonds again. Somebody else is fearful, so that's why yields are going down. Willie, give me the high of the yield today, the 10-year high, and where it is now, the low. So there's nothing to be confused about here. It's really simple. There's only a hand. Let's start out with 10 stocks control 41% of the S&P 500. That's enough right there to tell you what's going on. Throw all the other stocks away. That's called narrow. We have a very narrow. We were at 4.62. What's it now? 4.5. That's a big drop. So somebody's in there scared. Somebody's buying a lot of bonds right now. They're nervous again. They're buying bonds. 4.57? I think that's what he said. Okay, so that's a big drop. So why is that dropping? Out of fear. Because someone's fearful. They're looking at what I'm looking at and saying, what's going on here? That forecast was so bad yesterday, but when the 6 out of the 12 big institutions jumped in and bought their tech stocks back, the same 4 stocks, and then they plowed even more money into those stocks. That's why we couldn't get IWM to turn red. And then they plowed money into the ETF IYZ. So that's where it all started. So it's going to be interesting to see what's going to happen as we move forward from here. So yields, remember, they pulled back yesterday on bond buying from 4.65 to 4.65 to 4.61, I think. They pulled back. And so again, so it's going to be, let's see, I'm just trying to look up something here. So what we have to do is make sure when you're trading that you are very tuned in to your IWM. I'm going to put it up here in a second for you. Yeah, here we go. Okay, so let's take a look at what's going on. So IYZ took off today big. See it? So IYZ, why did it take off like that? Well, because the 6 biggest institutions with $32 trillion poured a whole bunch, parked money in there. They didn't put money in there to want the stock to go up. They didn't buy it as an investment. They have parked their money. They can't go to a bank and park their money. So that's why that went up. Now let's go to see how we're doing with the data center builders. Let's see if Microsoft didn't do much today. Amazon didn't do much today. But let's go down now to the five biggest, the machine makers. AMAT went up a little bit today. CLAC went up a little bit today. ASML went up a little bit today. And LRCX went up a little bit today. The biggest move was the amount of money they put in IYZ. Now, if you go down and take a look at the support stocks to support NVIDIA, I mean, NVIDIA is the deal. We all know that, right? NVIDIA is the deal. And NVIDIA today, okay, NVIDIA didn't have a very big day today. That was disappointing. And the stocks to support it, AMD, okay, MU, AVGO, TSM, and SMCI, they didn't have a big day either. So that's why people are confused. So if they didn't have a big day, why is the market going up? I just explained why. Because, again, you have the institution buying their stocks back and parking a lot of money. So what you want to watch is IWM. I'm going to put that up here right now, IWM. This is what my gang does every day with me. IWM is so important. That's the small mid-cap stocks. And see how IWM is going up today instead of going down? That's what's confused everybody. They're going, wait a minute, shouldn't IWM be going down? The small mid-cap stocks? No, because the institutions, instead of selling stocks, they were parking money in stocks. But watch the yield, it's never wrong. We'll talk more about this tomorrow. Join my gang, free for 10 days.